Hello. Hey, this is just a wrap up on my gold play. I made a small gold play on the futures because I was looking at the chart, the 4-hour chart, and I already decided what I wanted to do. As soon as this 4-hour trend line, meaning a 4-hour trend line, each candle is 4 hours, right? And these touch points line up. So I decided to draw a trend line because it was following a trend. And as soon as it broke this trend on this candle, what I did is I did a put credit spread. What I did is I sold the 1920, meaning I didn't think gold was going to go below 1920 an ounce, right? And this was on Friday, see, the 30th. And then this morning at 7 in the morning, I decided since it's gone up, and I think I made $80 total on this play because I think it still may go up, but it's reached this point right here, like I said before, that it might hit. This is a 4-hour candle, so maybe tomorrow's a holiday, so maybe on Wednesday it may hit this point again and then drop down below this trend. So the reason why I got out is because yeah, that's the reason why I got out on that gold play. So as you can see, my timestamps: Friday at 12:17 p.m. around noon. I made the play. I got a 100. I don't know if these are 100. I think $180 credit. And let's do a duplicate similar order and see what it says. Yeah, $180 credit, meaning, and then that means I got a $180 credit on a potential $180 credit. I mean a potential $180 profit. But since who knows what's going to happen Wednesday or Thursday, because it might drop down to it might drop. I don't think it'll drop down to $4.19.20 an ounce, but you never know. So I just took easy money, the $80 right here. Actually, that's $70. That's 180 minus 10, so that's only $70. So I ended up getting a $70 profit on it, and that's what I got. So I just wanted to show you the gold play. That's it. And I might make another gold play next week, or no, this week. It's a holiday, so I might make it. Maybe I want one that expires on like a Friday or something. So maybe on the 14th or the 21st. So I'm going to look at the 14th. And I still think gold may go down again. So what I can do is maybe play the downside play, playing something like up here. Let's say 1950. Yeah, 1950. So if we play the 1950, we want to sell calls on here in the 1950. And this will be for $425 collateral about, and we're gonna out of that you get a $140 potential profit. See, max profit, but that's not the max. That's a potential profit. So if we look at the 1950, yeah. I mean, what, 1960 maybe. I probably look at the 1950 or 1960, or I'm actually just do a spread on that. Yeah, see, you have to risk it $800. But if I make it a bigger play, if we raise this up to maximum potential profit of 1,000 and see how much it costs. Yeah, this is over 5,000, so it's not. So what we can do is just tap in, go into one cycle in closer to the money here. And see, it brings it over $1,000 potential profit. So I'm just thinking out loud, because I might do the 14th, or I might do the. I want to do a Friday especially, so the 14th or the 21. So let's look at the 21, and we're looking at the 1950. So this will be like a about $3,000 in collateral you need. That means you need that money in your account, and that's theoretically what you're risking. But if you're watching it, you're not gonna lose this amount, because you're watching it and you're gonna sell out, stop out, and whatever's in your head, you're gonna stop out. Say, on this play, I'm gonna maximum lose like $100 or $200. Bam, just sell out immediately, and you won't lose more than $200. But that's it. I'm looking at the 1950, and I'm doing like maybe a 10-point spread. So I'm gonna go out here, risk 3,000 to make 800. So that's the two plays, either July 21st or July 14th or July 21st. I might make it on opening, maybe, because I think that the futures will open the 4th of July, but it'll open like at 6 p.m. or something the day before. So that's my thought process. I might make it. Yeah, and this is the play I'm probably gonna make. It's a good 1960. I don't think it's gonna go up to 1960. Yeah, this is a good one right here. I was even thinking that it just go right here to 1950, because I think it's not going to go above here. This big candle here, back in what day was it? June 23rd. I think it's going to hit a wall right here. It's not going to go up, but I think it's still going to go down below the trend line overall. But in the short term, within the next few days or this week, it might pop back up again. So those are my two potential plays on gold. And I'm playing it on the futures options, because it doesn't tie up because I can actually do GLD, but those tie up because this is a margin account, and you need margin account to trade futures. So, and trading GLD will eat up my my pattern day trade rules, because this account is under 25,000. So I can use futures, and using futures, it doesn't. Pattern day trade rule does not apply to futures, even futures or futures options. It doesn't apply to it. So that's the reason why I play gold on the futures. Anyways, that's it. Have a good one. Ciao. All right, those are my plays. I'm going to short the calls on the 14th or the 21st, and I'm going to short the 1950 or 1960, and I'm going to do a 10-point spread. And I like this platform because you can just click and it can tell you immediately how much you're going to make, how much you're going to risk, and all that. So this is the reason why I like trading options on this platform. But I usually play it on Robinhood too, but I like this one because it tells you in advance what your maximum loss is and all that. So, all right, that's it. Ciao. Bye.